It's poverty.
It's crime.
Unemployment.
Corruption.
Accountability.
The energy crisis.
Inflation. We are worried.
That South Africa has myriad problems on all fronts is a given. But the time has come for us to look for real solutions. I'm Jeremy Maggs, and this Moneyweb podcast will discuss those solutions on how South Africans can solve problems by having tough conversations and drawing on the insights of South Africa's top business leaders. Welcome to Fix SA. Today we're going to dive into the vital role of small and medium-sized enterprises in driving economic growth, job creation and innovation. My sense is if we get things right on that particular front, it's going to go a long way to fixing South Africa and the myriad problems that we still face. Joining me is Ketso Gordon, who's Chief Executive Officer of the SA SME Fund, which has been instrumental in catalyzing growth for SMEs across various sectors. I'm hoping that apart from identifying the big problems that face small business, we can also discuss how the fund is breaking down barriers for entrepreneurs and obviously then opening doors to funding and fostering collaboration will unlock all the untapped potential of South Africa's SME landscape. So Ketso, with that very long introduction, a very warm welcome and thank you so much for talking to us. Before we get to the SME space, maybe just a broad brushstroke from you. We have a new coalition or GNU government. What's the general sense among the stakeholders that you operate with? Is there a renewed sense of optimism?
Yeah, I think it's cautious optimism. I think the expectation is that some of the reform agenda, which has been talked about for many years now, will start getting implemented. That simple things like, getting the visa application process through Home Affairs, particularly for skilled people coming into the country, is going to be fast-tracked. There's an expectation that there'll be more money made available for supporting infrastructure growth in the country, which is a key sort of foundation upon which all businesses operate. So I think there's cautious optimism. And I think the mood is definitely positive. So, if you look at pure sentiment, I think it's positive. It's up. People are putting more energy. They're looking more optimistically at the future.
The challenge, of course, is to make sure that small business is not left behind.
And I think that the big business organizations are now more mindful in their conversations with government that they need to also represent small businesses. And we've seen, in the conversations with state agencies, the government departments, that there's a little bit more awareness of the need to reduce the regulatory burden on small businesses, to make procurement, a bigger part of how people operate, to pay within 30 days because the working capital cycle for small businesses is much harsher than for bigger businesses. So I think there's a little bit more awareness. Yes, I agree with you. It still needs to convert into a lot more action. But I want to be optimistic that we will see more changes.
I mean, that's the problem, is that you can have as many observations as you like, but unless that crucial gap is closed, we're simply going to be spinning the flywheel, aren't we?
And I agree completely. And I think one of the biggest criticisms of government in the past sort of period has been, saying the right things but not doing the right things. And so I think the optimism about the GNU is predicated on, the expectation that there'll be more execution, more implementation.
Let me get a little bit philosophical for a moment. If I had 100 Rand for every time someone said to me, small business is the panacea or the fix as far as South Africa's economy is concerned, I would be a very wealthy individual. Ketso, maybe just make the point at the beginning of this conversation. In your opinion, how can small business fix the economy in this country? What significant contribution can it make?
So I think what we've seen from a structure of South Africa's economy point of view is that many of the sectors are dominated by the top 3 or 4 or 5 players in that space. So if you look at retail or telecoms or banking or whatever it is, the top 3 or 4 players or 5 players dominate the market. So it's been difficult for smaller businesses to operate in this environment. So that's the first point. Secondly, I think that there is value in the statement that it's a panacea, mainly because I think it's a low-cost way of creating large employment. And we've seen, that labor-intensive construction of housing in townships or social housing or student accommodation. All of those kinds of things contribute to job creation and can be done by smaller businesses and are being done now by smaller businesses. We've seen in the more informal end of the small business spectrum, whether it's taxis or spaza shops or hair salons or whatever it is, have the capacity, to create livelihoods and create employment. And for me, one of the big things the SMEs help with is job creation. And so the two are very much linked to creating a solution for the country.
Someone pointed out to me once that they will always face the double S problem, though, the two S's being scalability and sustainability. A little bit more difficult to accomplish given some of the constraints that you have mentioned that exist.
Yeah, no, those are difficult challenges, and there are many businesses that don't need to scale. So I think this obsession with scale sometimes can be a bit of a constraint. So if it's a circular economy, localized economic business, so a spaza shop going from a revenue of 300,000 to 1 million is a life-changing experience for the owner of the spaza shop. And, a lot of the work we do is about doing that kind of stuff. So I can tell you very quickly, anecdotally, that a 30,000 Rand working capital loan to a spaza shop on average results in a 100% increase in revenue. Just because they buy a lot more, they buy it once in the month, they buy it at a better price, and they give themselves more time to focus on the business. So think about that. I mean, we've moved somebody from, a 400,000 Rand turnover to 800 turnover. They've got a 15% margin. They are now in a better position to live their lives, maybe send their kids to a better school. There's so many opportunities for that extra income. So I think scale really does apply to businesses in the tech space in which we work. And most of them are beginning to scale, mainly because they're designing products that can work in South Africa, can work in Africa, and sometimes even outside of South Africa and Africa. And their scalability is almost part of the design of the business. Most small venture capital businesses won't attract capital unless they can show their ability to scale. The capital is just not available for businesses that are going to remain purely local.
Are you encouraged and even sometimes surprised by the ingenuity of people who play in the space? Maybe give us a sense, if you can, and you deal with small business owners on a day-to-day basis. Give us a sense of the ambition and optimism that they display, often against all odds.
So I'm going to give you two very different examples. One that comes out of the work we do on debt side, lending. And the other one I'll give you is from the venture capital side, which has got to do with technology and innovation, as important for economic growth as anything else. So on the lending side, we work with a partner called Indlu Living, and they build backroom housing in townships. And these are proper, sort of bricks and mortar buildings, high quality, and they have designed a sort of software package where they can come to your property within an hour or two. They'll have an architectural design. So it's a very low-cost model. They have a system for contracting all local small businesses to build the 6 or 8 or 10 rooms that are being built in your backyard. They have an Airbnb-type booking system with a QR code for people to pay their rent. And it's a 5-year mortgage. And it's the only mortgage I've come across in the world where from day one, the owner of the property gets 10% of the income. Indlu takes 90% of the income to sort out the debt. Typically, they're spending around 1 million rands. They get that back and they pay it off in 5 years. In year 6, the property owner is getting 90% of the income. Indlu is getting 10 for the ongoing management and support of the payment system. And now I've met people who are in year 6 of this project. And it's a game changer because, one, you've got an asset. 2, you've got passive income. And it has resolved the intergenerational sort of wealth creation challenge for that particular family. Now, this is the kind of stuff that frustrates us because, if I was government and I saw what Indlu was doing, I would apply that model, on a national scale and provide as much financial and institutional support to get 1 million people doing that. Because I think that could be a single initiative that could change the face of things in the country. An example on the tech side is we have some incredible IP being generated by the universities and our science councils. And what's missing is the ability to commercialize this. And so what we've done as the SASME Fund in the last couple of years is created a number of funds. One's called the University Technology Fund, One's a biotech fund, one's a hardware fund, and we're helping to commercialize the clever ideas coming out of our institutions. The example I want to give you is a satellite-linked business called CubeSpace that comes out of a professor doing work with his PhD and master's students at Stellenbosch University. And now they've designed the ability to create these tiny cube-sized satellites that can be directed in space so that they're not just doing the single orbit. And it's incredible that this IP is world-beating and produced right here in Stellenbosch. We've invested in that business. It's grown from a turnover that was, minuscule to now somewhere between $10 and $15 million a year. It's about to go offshore and open up branches in Europe. And this is the kind of business that one day, I remain optimistic, will become a unicorn. It'll, be a $500 billion business one day, grown right here in South Africa. We are doing some of the most innovative work in understanding the African genome and how to use that for precision medicine or for drug discovery. So there's really amazing stuff going on just below the surface. And I think coming back to the original point we were chatting about, if we had a more sort of welcoming environment, less regulation, more support from government to support these kinds of initiatives, I think we would have doubled the impact that we are already having now.
Let's talk about regulation and government support in just a moment. But given the two examples that you've just outlined, and without giving away or ceding proprietary information, how do you share and spread good ideas and best practice, such as you've just outlined to me? Because surely the more people that learn from that, the more likely we are to create a fix.
I think many of the people we work with, both on the sort of the township economy and venture capital side, don't see other people as their competitors. It's an extremely collaborative place where people are helping each other, growing alongside each other. So the spaza shop business, for example, I introduced them to a group that was doing rooftop solar, at an affordable price in the township. Spaza shops need solar. And so the two are now collaborating, and there's a whole new business about putting rooftop solar for spaza shops. I then met a different group of people, unfortunate name, but called Riot Networks. And they do a decentralized internet availability. And they create like a node of 70 houses or customers. And the end user can get internet access at 99 rands a month. So, I put them in touch with the Inlu guys, because the Inlu property developer could be the key node for creating, the 70 connections around them. So people are collaborating. People talk about these things pretty openly. And I think that if we were able to provide more capital and a bit more support. So, for example, the backroom housing thing, if government took it on and decided we were going to scale this up and we're going to be as helpful as possible, you would speak to the municipalities and ease the planning burden. Because getting the planning permission can delay a project by between 3 months and 9 months. In the meantime, you're losing out on the opportunity to build that housing and start creating income. So simple delays like that could be removed. And one of the things I'm championing quite a lot, for a discussion at least, in South Africa is the use of blended finance. So if you're doing higher risk things in a township or in a venture capital environment, if government provided, the subordinated first loss capital, and somebody else came along and they provided maybe sort of some subsidized debt or subsidized equity, and then that would encourage the people that are looking for more commercial returns, the pension funds and the insurance companies, to put their money into those spaces, because they know that they've got a bit of downside protection, a bit of a guarantee, and it'll be easier for them to allocate capital to that kind of thing. So if government said, listen, we are going to be the kings or the queens of blended finance, and we're going to do it for small business, and we're going to do it for VC, and we're going to do it for infrastructure, that would be quite an amazing thing for the country.
And it's a great idea and probably an easy concept to understand, but how do you make that case to government? Is it a policy change? Is it less regulation? Is it throwing a bridge out to the private sector to become more involved, or a combination of all three?
No, I think it's a combination, and it's really just encouraging the use of taxpayer money rather than government. So government lends directly, for example, to small businesses. So it does it through an institution called SEFA. So say, for example, in a typical year, SEFA will lend, let's say, R1 billion, about 700 million rands of that money would be impaired. Now take the billion, say we don't need it back, go to the private sector, use it as first loss capital and gear it up. We would be able to deliver a 5 billion rand fund. So it's the same money. Look at the two different outcomes. The one outcome, I invest or lend 1 billion and lose 700. And the other one, I give away 1 billion, but I lend 5 billion. That's the magic of blended finance.
One of the other issues that small businesses face is to try and find better integration into supply chains, particularly in key industries like manufacturing. Surely if that wheel is lubricated a little bit more, things would be easier for smaller businesses and again would enable an economic fix.
I think that, if you talk to small businesses, their frustrations are not being paid in time, so that impacts their working capital cycle, having to produce incredibly detailed documents and very detailed financial information before you can qualify in a procurement role. And they don't have the money to do that. They don't have the skills to do that. We need to, I'm not saying lower the standards, but we just need to be more flexible about how we measure the ability of a small company or their credit worthiness so that we can give them work, we can give them money. And the other red tape stuff is the typical things people complain about, which has got to do with, all the laws that apply for employment equity or anything else to a big company apply to a small company. And if you excuse the smaller players below a particular threshold from having to deal with all of that government bureaucracy, it would lower their costs and make a big difference. But the reality is that one of the biggest side costs, indirect costs for small businesses is security. So in South Africa, small businesses spend a disproportionate amount of their money protecting the business and making sure it can continue to operate. Finally, we've dealt with the electricity issue because that was clearly the number one problem for small businesses. So if you take, the examples I've just given, and even if you didn't deal with all of them successfully, but at least, did a couple of those things, I think the sort of multiplier effects for small businesses would be great.
So we've spoken about access to finance. You've given me a good sense of the difficulties and challenges that small business face. What about getting small businesses future fit and even present fit in terms of actually managing the enterprise? Surely if we have a better understanding of business principles, smaller businesses will operate more effectively. The sense that I get, Ketso Gordon, is that's not always the case, is that often, it's a great idea. People start the business and they flounder within months or at least a year.
So we are seeing the emergence of incubators and accelerators and business support sort of organizations. It's relatively undeveloped in South Africa. I mean, it's been happening for a while. I think if we spent more time and money and got, sort of retired executives or other kinds of people with time on their hands, but who've had a life full of experience and wisdom to bring into this environment, create more mentoring networks, create more opportunities for people to learn and get qualifications, make online learning a little bit more accessible and affordable. I think the number of initiatives in that space, there are some, so I don't want to make it sound like we haven't done anything. I think South Africa's been attempting to do this stuff. I think we must learn from the best and sort of put more time and effort and money into scaling it up. But the real difficulty for a small business owner is they don't have the time for this stuff. So the easier you make it for them to access a mentor or a course or some level of support, the better it is.
Given that we have a lot of big business operators and chief executives listening to this conversation, what then would your call to action be to bigger, more established and even listed companies?
I think the first thing would be to say, pay in 30 days. I don't want to name and shame, but there are large corporates that have gone from 45 to 90. It's not good for the small businesses because that working capital cycle is just, it's just too much and they can't cope with it. And it's one of the reasons many of them fail. So, if they did that would be a very good start. I think secondly, I would say, use your supplier development and enterprise development money, which is a sort of tax, relative to turnover and profit. Use it more creatively. Let's collaborate as CEOs or large businesses to see what can be done by working together rather than each of you doing, your own little program and not paying enough attention to it and maybe giving it a little bit more airtime, and bring in the experts who can probably give you better advice on how to manage. It's a lot of money. We're talking about billions of rands a year that get spent in two regulatory sort of environments. One is supplier development and the other one is enterprise development. So I think that would be a very meaningful thing to do. And it could be a source of conversation between government and business, using that money as part of a blended finance structure, for example. We would be very happy to be part of a conversations where those kinds of things were being explored more fully. And thirdly, there is definitely a lot being done on promoting procurement from small businesses. But like with everything else in South Africa, there's a lot more room for improvement. And for me, that would be a third big thing. And I think the fourth thing is helping small businesses by representing their case. And if we did those four things, I think it would be a big step up from where we are.
And my final question then is medium to long term. You've sketched a very desirable, enticing and interesting future. Do you think that small business is going to find this direction? Do you think we'll get it right?
Like with most things in South Africa, cautiously optimistic. I see that the non-bank lending sector, which is where the largest number of micro and small businesses access their capital, is growing nicely in South Africa. And fintech has made it cheaper and quicker and more accessible. And so I'm optimistic on the growth of the non-bank lending sector, which means more capital going to small businesses. I'm optimistic that government will finally get some of the memos on the need to reduce the regulatory burden, and will do, even if it's a couple of small things, that makes the lives of small businesses easier. I think the campaign to pay in 30 days has been tried a number of times, and I think it will continue to get the attention it deserves. Because if we can solve that, I think we'll be saving hundreds of businesses from going into liquidation. On the venture capital side, I'm slightly more optimistic, mainly because we've seen sort of more than 100% year-on-year growth in venture capital over the last 5 or 6 years. We are beginning to show that it can produce the kinds of returns and maybe even better returns than the asset class that has gotten a lot more attention over the last 15 years, that is private equity. So I think we have institutional interest in putting money into venture capital. And if we can keep growing it at 100% per annum and showing, traction and showing some attractive exits, I think it's going to be a game changer. So yes, if I summarize it, it's heading in the right direction, and I am cautiously optimistic.
Ketso Gordon is the Chief Executive Officer of the SA SME Fund. Ketso, thank you very much for joining me on this edition of Fix SA here on Moneyweb. Thanks for listening to this Fix SA podcast. For more episodes posted every second Friday, go to moneyweb.co.za, the Moneyweb app, Apple Podcasts and Spotify, or follow Moneyweb News on social media for more updates. Moneyweb, your trusted source for business and investment insights.